Here's a summary of the Goldman Sachs earnings call for Q4 2025, designed for clear and concise reading aloud.
Good morning, everyone. My name is Katie, and I'll be facilitating today's call. We're here for the Goldman Sachs Group, Incorporated's fourth quarter and full year 2025 earnings conference call, held on January 15, 2026. You can find the earnings presentation on the Investor Relations page of our website. We'll now hear from Chairman and CEO David Solomon and CFO Dennis Coleman. David Solomon, CEO.
I'm very pleased with our strong performance in the fourth quarter and for the full year 2025. We delivered earnings per share of $14.10 in the quarter, with a return on equity, or ROE, of 16%, and a return on tangible equity, or RoTE, of 17.1%. For the full year, we achieved an EPS of $51.32, a significant 27% increase year-over-year, with an ROE of 15% and an RoTE of 16%. Looking back to our 2020 Investor Day, we laid out a comprehensive strategy to grow and strengthen the firm. Guided by our purpose to be the most exceptional financial institution, we've executed successfully. We've increased firm-wide revenues by approximately 60%, grown EPS by 144%, improved our returns by 500 basis points, and delivered a total shareholder return of over 340%, outperforming our peers. Crucially, we've achieved this while materially improving our risk profile and enhancing the resilience of our earnings. We've doubled our more durable revenues and reduced historical principal investments by over 90%, from $64 billion down to $6 billion. This shift to capital-light businesses has led to a 320 basis point improvement in our stress capital buffer. In 2025, our interconnected franchises delivered exceptional results. In global banking and markets, we maintained our leading positions in M&A advisory, equities, and FICC, gaining 350 basis points of wallet share with our top 150 clients. Our more durable FICC and equity financing revenues reached a record $11.4 billion for the year, generating returns exceeding 16%. In asset and wealth management, we are a top 5 active asset manager and a leading alternatives and ultra-high-net-worth wealth manager. We saw record growth in our durable management and other fees, alongside record private banking and lending revenues. We also raised a record $115 billion in alternatives. Importantly, we are taking the final steps to narrow our strategic focus. Following the transition of the General Motors credit card program, we announced an agreement last week to transition the Apple Card portfolio. These moves reflect our commitment to a more focused and efficient Goldman Sachs.
Dennis Coleman, CFO.
Good morning, everyone. Let's look at the Q4 and full-year financial results. In the fourth quarter, we generated revenues of $13.5 billion, with an EPS of $14.01, an ROE of 16%, and an RoTE of 17.1%. For the full year, our EPS was $51.32, up 27% from last year, with an ROE of 15% and an RoTE of 16%, improving 230 and 250 basis points, respectively, from 2024. The transition of the Apple Card portfolio had a net positive impact of 46 cents to EPS and 50 basis points to ROE in the quarter. While this resulted in a $2.3 billion revenue reduction, it was more than offset by a $2.5 billion reserve release upon moving the portfolio to held for sale. As we complete our strategic narrowing, we've made minor organizational changes and corresponding updates to our segments, which are reflected in today's presentation.
Key financial metrics and highlights. Q4 2025 performance. EPS, $14.10 ROE, 16% RoTE, 17.1% revenues, $13.5 billion full year 2025 performance, EPS, $51.32, 27% increase YOY, ROE, 15% RoTE, 16%. Improved 230 BPS and 250 BPS versus 2024. Strategic progress. Increased firm-wide revenues by 60% since 2020. Grew EPS by 144% since 2020. Improved returns by 500 basis points since 2020. Total shareholder return over 340%, outperforming peers. Doubled durable revenues. Reduced principal investments by over 90%. Improved stress capital buffer by 320 basis points. Segment highlights: Global Banking and
Markets. 1 M&A advisor, 1 equities franchise, leading FICC. Wallet share gain of 350 BPS since 2019. Durable FICC/equity financing revenues at record $11.4 billion, with returns greater than 16%. Asset and Wealth Management, top 5 active asset manager, leading alternatives and ultra-high net worth wealth manager. Record management/other fees, and private banking/lending revenues. Raised record $115 billion in alternatives. Apple Card transition. Net positive impact of 46 cents to EPS and 50 BPS to ROE in Q4. Management's forecasts and outlook. Wealth Management. Continuing to invest in broadening footprint and coverage for ultra-high net worth clients. Exploring broader access through third-party wealth channels, including significant investments in partnerships with RIAs. Targeting 5% annual growth in long-term fee-based wealth assets. Returns. Reaffirming mid-teens ROE targets. Management is comfortable operating as a mid-teens firm and believes opportunities exist for upside over time. They are not setting higher targets until the firm is further elevated. Asset and Wealth Management margins. Increased confidence in operating the AWM business at a higher margin of 30%, which drives higher overall firm performance. Capital markets environment. The world is set up to be constructive for M&A and capital markets activity in 2026, with a base outcome for M&A near 2021 levels and a bull outcome exceeding them. Potential headwinds from exogenous or macro events are possible, but not the likely outcome. CFO supplement. Industry-wide investment banking volumes are trending above average in several categories. IPO business remains below average. Significant volumes in sponsor capital committed deals and large-cap investment-grade activity are yet to be seen, presenting further upside. Equities and fixed income. Diversified portfolio of intermediation and financing activities. Primary market activity enhances secondary market making. Expect continued increase in overall capital markets activity, catalyzing incremental intermediation. Significant risk factors. Exogenous events/macro shocks. Potential for unforeseen global or macro events to impact sentiment and slow down M&A and capital markets activity. Market volatility. While the environment is constructive, market sentiment can shift, as seen in April 2025, potentially impacting activity levels. Execution risk. Continued successful execution of strategic initiatives, particularly in expanding wealth management through third-party channels. Highlights: strong EPS and ROE performance, exceeding prior year results. Significant progress in executing long-term strategic goals, including revenue growth and reduced capital intensity. Market leadership maintained and expanded in key franchises. Record fundraising in alternatives and strong fee-based revenue growth. Positive impact from the strategic narrowing of focus, exemplified by the Apple Card transition. Increasing confidence in higher margins and returns within asset and wealth management. Constructive outlook for capital markets activity in 2026. Lowlights. The transcript does not explicitly mention specific lowlights for the quarter's performance. However, the mention of potential headwinds from exogenous events and the fact that IPO business is still below average could be considered areas of ongoing focus or caution. Most important statements from CEO and CFO. CEO, David Solomon.
We have strengthened and grown the firm through a relentless focus on delivering excellence to our clients.
And
we are taking the final steps needed to narrow our strategic focus.
CFO, Dennis Coleman.
Given that we are taking our final steps to narrow our strategic focus, you will have seen we implemented minor organizational changes and made corresponding updates to our segments, which are incorporated in our earnings presentation today.
This concludes the summary of the Goldman Sachs Group's fourth quarter and full year 2025 earnings conference call.